Morning, everybody. Hey, I'm jumping on live here today. Want to go over some stuff, some economic stuff, give some updates, talk about some things that are going on in the markets, and give you some real estate tips. Also, happy to do some Q&A as well, but I'll give it a minute. We're kind of doing this double live. So if you're on Instagram, I apologize, you won't be able to see the slides that I've got that I'm going to share, but feel free to drop questions or comments. I'll do my best to kind of stay on these. Hey, I see Tina Villa. Let's go. How's real estate treating you, ma'am? Got some people from our crew jumping on. Callie, I see on here. Sean, I see on here. Sean, I owe you a phone call this morning, sir. Good to see some of you guys jumping in here. So, well, hey, I just want to talk through a couple of things. We're doing kind of a little bit of a test run. We're going to start going live inside of our community a little bit more often. But if you got questions on the market, you got questions on what's happening in the economy, I'd be happy to chat with you about that today. But I want to go through some things, what I like to call logic economics. I think some of these people that are out here are, really more interested in creating hype than they are in creating facts. And I think it's really important that we trust the news less than we trust the facts, right? The goal here is not to trust the media. The goal here is to trust the facts. Benjamin Goodpasture, the sensei himself is on. He says, teach me. I'm just still trying to get on your level, sir. But appreciate you jumping on. But I want to kind of go over some of those things with you guys. And if you're in on any of the other platforms, Facebook, YouTube, etc., you'll be able to see I've got a deck that I'm going to share with you that I call logic economics. If you're on Instagram, you'll have to follow along. Just with the data, I'll read it off to you. But I appreciate you guys jumping in. Here's some details that I want to go over. First of all, I want to get out of the fear mongering that is happening with some of the talking heads. I don't know what it is that has caused this agenda to cause us to want to fear some sort of economic market crash when it comes to the real estate space. Now, listen, I'm not saying that what's going on in China and what's going on in the Middle East and those things don't have an impact. Of course they do. We're talking today about the real estate market and recognizing that ultimately we are in a place right now as a market where the supply and the demand do not equal any foreseeable crash in home prices. Now, are prices going to crash? Probably, eventually, someday, the market will crash again. I'm certain of it. When that happens, how that happens, I don't know, but I can tell you it's not going to happen in 2024 because the simple logic economics of supply and demand do not allow us to create a housing crash. It doesn't work. And I'm going to talk about some of those numbers. So I want to go through a few slides here that are kind of like facts, fears versus facts. The fear is the market is going to crash. It's, the market is too high to buy. Cash is king, right? All the stuff that we're hearing out here. And my point is that let's look at the facts, not the news, right? Let's trust the facts, not the news. So here's a fear. Prices are declining rapidly. Well, here's the fact. We are in a all-time low in terms of inventory, creating an environment that is not conducive at all to what we saw in 2008. So many people like to say that, oh, this is, we're on the precipice of another 2008. Well, here are the facts. In 2008, the national home value dropped by 27, almost 30% in that crisis, in the housing crisis that dropped. Housing prices, when they dipped at the end of 2022 and coming into 2023, they dipped for a blip, a moment of time, and have increased year over year by 10% since in many regions across the country. So we are not seeing falling housing prices at all. Here's another fear that we're seeing, that we're hearing a lot of people talk about is it's another balloon, right? The balloon's going to pop. The prices can't, this is one of my favorite ones. Prices can't go any higher. Well, why? Like what presupposes that data? Prices are driven based upon supply and demand. And the only argument that I hear made for a price or the balloon or it can't go any higher presupposes this idea that the government has any interest in improving home affordability. We don't see that historically in any other first world country. Most first world countries, think of Australia, think of Asia, think of many places in Europe. Home affordability is not a part of their country's dream. Look at even in our own country, places like New York City and San Francisco. Renters are the future of the economic cycle, and I don't believe that we're going to have an environment where home ownership is going to be a part of the American dream in just 10 or 15 years from now. Like, I think that right now what we're seeing is that prices will continue to rise. Supply will continue to be challenged, demand will continue to grow, and then ultimately we will struggle to get that right-sided. And so the fear is it's another balloon, it's going to crash. I just don't see how that looks or how that works when we look at things like inventory levels. In a normal market, there are between 2 and 2.5 million homes on the market in a normal market. Let me move my phone here so I can see my slide here. In 2008, to give you guys context, at its peak, there were over 4 million homes on the market. For comparison, we just dropped below 1.1 million last month in active homes on the market nationally. In other words, we have less than half of the inventory needed for what we would call a normal market, and we are nowhere near the levels of inventory that would imply a reduction of prices. And oh, by the way, we have more pent-up demand than ever before. Where are all the people that were getting outbid on all their properties when rates started going up and they got shoved out of the market? Where did they all go? They all just decide they don't want to buy homes? No, they're sitting on the sidelines, pissed off, sitting in their rentals, waiting for an opportunity to re-enter the market. And there's been studies done that say that for every 1% the rates drop, up to 1 million buyers will re-enter the market. Well, you have 1 million buyers re-enter the market, and we only have just over 1 million active listings. You can see where the price conundrum comes in. There's just no argument for this increase. And my question to everybody is, where does the inventory come from? Right? If that's the answer, right, is where's the inventory come from? Well, let's talk about it. Some of the fears that I've heard is that the market is flooding with foreclosures. Well, let's look at the facts. In 2009, which was the height of foreclosure land, there were 2.8 million foreclosure filings in the U.S. Coming into the first half, which is the most updated data we have, and in the first half of 2023, there were 74,000, and the new data will come out here shortly. We do not expect to see a massive increase. So when we think about this from a flooding of inventory, let's just pretend that all of these foreclosures come into play. We're talking drops in the bucket in terms of the inventory gap that we have available to us. And by the way, with the average mortgage rate, which we'll talk about in a minute, being at an all-time low, their payments being low, people are more motivated than ever to retain their home. So where is the inventory coming from? The market is going to get flooded with inventory. That's the fear, right? The fear is the market is coming. Well, where is it coming from? Let's look at the facts. You know that 33% of mortgages nationally are under 3%. Let me fix my deck geeked out on me, but that's okay. 33%, there it is. 33% of mortgages are under 3% today. 72% are under 4%, and over 90% of national mortgages are under 5%. Where are these folks going to go? Where's the inventory going to come from? Even if they wanted to sell their house, where would they sell it? Like, where would they go? Nobody is going to sell their home to buy an equal or lesser home for more money than where they're at now. Now, I'm not arguing that there aren't people that maybe want to get out of their homes or to sell their homes, but my question is where are they going to come from? Where is the inventory going to come from? Here's another fear. People are like, well, what if it's not inventory related at all? What if people are, just losing their jobs? We can't afford their payments. Well, let's look at the facts. Economic factors. U.S. unemployment at its peak in 2009 was at 10%. So to give you guys context, when we were at an all-time high of unemployment in the U.S., we peaked at 10%. U.S. unemployment most recent rates 3.8%. The only time we did see a small peak was at the pinnacle of the pandemic. We saw a peak there, but we came immediately back down to 3.8%. Where are the job losses coming from? Nobody's losing their job. 3.8%. That's a healthy unemployment rate in terms of U.S. economy. So again, guys, we're looking at the data, not the hype, not the news. And if you don't want to buy real estate, you don't want to get into the game, then like make that your decision. I got no dog in that fight. But what I want you to do is make that decision from a place of information and a place of understanding the facts, not buying some CNBC or some Fox News poll that's trying to drive you away from building legacy wealth. Real estate, specifically commercial, but all real estate has outperformed the S&P 500 for over 25 years. Another fact that should blow your mind is that 65 out of the last 71 years, real estate has either stayed the same or gone up in value. It is the most secure, the most predictable asset class that exists today for building legacy wealth. The far more likely outcome, for those of you that are on, you see the screen, the far more likely outcome than a massive price reduction in real estate markets is that appreciation falls back to normal run rates, right? 3 to 5% annually. This normalizing of the market, I've been saying it to our students and our team, the normalizing of the market to me is that we just get to a boring market where it just goes up 3 to 5% in most markets. But what this means is that a home that's $350,000 today will be worth nearly $450,000 in 5 years. So for everybody that's sitting on the sidelines going, well, I'm just going to wait for the rates to go down, you are going to lose $100,000 in potential appreciation. And that's presupposing that if the rates do come down, prices aren't going to go through the roof. Also, in that same period of time, if you wait to buy, the principal reduction by just making the payment that many people are making to the landlord, that many people are making to other bill collectors over that same period of time is roughly $79,000 in principal reduction that could have been being paid to the principal balance of home ownership. My goal for you is to own as much dirt, as much real estate as you can humanly, possibly, responsibly accumulate, because rates are not going to be the problem long term. Affordability is going to come through prices. But what happens if rates come down? I already told you, buyers flood the market. With no additional supply, the demand prices are sent soaring, and those who own can always refinance. I'm not the guy that's like, hey, date the rate, marry the house. Like, I understand what they mean, but really what it is accept the rate, get the house. Like, the interest rates are not, they've become the big problem in everybody's mind, and we're missing out on the bigger picture, which is long-term appreciation, tax advantages, the benefits of owning real estate that build legacy wealth. Here's the second thing that I want to talk about is that this idea that everybody's freaking out about a potential real estate market crash, stock market crash. Here's the crash that nobody's talking about that I want to shout as loud as I can to my 4 people that show up on live, if that's what it takes. But the crash is not the crash of real estate. The crash is not the crash of stocks. It's the crash of cash. Here are the facts. The US dollar has lost 98% of its purchasing power since its departure from the gold standard in 1971. Means that our dollar is worth 2% of what it was in 1971. That should blow our mind. Another fact, dollar has the purchasing power of 35% of what it could buy in 1985, which is just 28 years ago. In other words, $1 million, if you had $1 million in the bank in 1985, it would be worth $350,000 today. So in order to keep up with inflation, which is the eroding our wealth, which is destroying our capacity, while everybody else is saying cash is king, cash is king, cash is king, inflation is going, no, cash is dying, cash is dying, cash is dying. In order to keep up with inflation, you would need 2.5 or almost 3 times the amount of money to be at net zero from 28 years ago. which also means that if we use our past to tell our future, that we're going to need to 3x our assets in order to just be level in 30 years. Which is why it blows my mind. Everybody's like, well, $100 a month, and Dave Ramsey, $100 a month over 40 years is going to be $1.1 million. I'm like, yeah, that's great. That's true. But also $1.1 million is going to be worth 270,000 in 40 years. So we have to understand that the goal here is not to save my way to financial freedom. The goal here is to play the game according to the rules of the wealthy so that we can start to build for our future, not just try to save our way into financial freedom. Nobody has ever saved their way into financial freedom. Like, nobody has ever saved their way to wealth. They've invested in asset classes that beat inflation, that compound over time, and ultimately they play the long game. And that is what I'm trying to encourage people to look at. And real estate is the chosen vehicle for me. It doesn't have to be the chosen vehicle for you. But if cash has become your chosen vehicle, you're going to be sorely disappointed in 30, 40, 50 years when you realize that you've been sold a lie that cash is king. Cash isn't king. Cash is trash. We have to get back to some version of a gold standard that hedges our cash against inflation and the erosion and the control of the markets. And I believe that real estate is the greatest asset that we can get back to the gold standard on. Inflation in 1985 was 3.56%. Our current year-over-year inflation just down now to just over 3, a little bit above 3. Right, so we're moving in the right direction, but when we look at this over time, we're going to continue to see challenges. All right, so here's some conclusions for you guys, and this is really where I just wanted to end up today, just kind of giving you guys some facts. Trust the facts, not the news, right? I'm not interested in what the talking heads have to say. I'm interested in what the data has to say. And you might sit here and go, well, you're just a talking head. Well, yeah, I hope that I'm a talking head explaining to you to go look at the data. I don't care if you agree with my synopsis. I don't care if you look at my opinion. I want you to look at the facts and draw your own conclusion. And the facts tell us that the greatest wealth building tool is hard assets. Warren Buffett, who's, obviously regarded as one of the greatest investors of all time, he's the one who coined the phrase, time in the market is always better than timing the market. The beauty of hard assets, particularly real estate, is it doesn't actually matter if you get a good deal. If you survive, if you hold, if you can sit on that asset for a long enough period of time, you will win. I say it all the time. I tell the story when I bought my first house. I was 19. I bought my first house right in 2007, right before the crash. Bought it for $252,500, and 6 months later, my neighbor who had the exact same unit sold at auction for $50,000. It went from being the coolest thing I ever did to the worst financial decision I ever made. But over a decade, I was able to regain and sell that property, get out from under it, right side up. I did not foreclose. I did not short sale. And had I held it longer, I would have had 6-figure returns, but I was just happy to get out of it. What it taught me, though, was this. My kids and my grandkids are not going to ever look at my holdings, my real estate portfolio, my wealth, my estate, any of that, and wonder what kind of deal I got on the house. Wonder what kind of deal I got on the project. Wonder what kind of terms I was able to negotiate. They're going to look at my portfolio in 30, 40, 50, 100 years, and they're going to go, man, that guy was smart. Everybody looks like a genius when they hold hard assets for the long haul. Everybody looks like a genius in 20 years. It does not matter. Now, look, I want to get deals just like the rest of you. That's kind of how we make our living, is looking for good deals. But the beauty of real estate is even if you buy a bad one, in 20 years, you'll look like a genius. Time in the market is always better than timing the market. Another conclusion for me is that the crash of cash should be far scarier than the risk of any other type of economic crash. The fact that nobody is talking about the crash of cash should be far scarier to any person than whether or not real estate prices are going to get affected or whether or not the S&P is going to take a dip. This has to be a focus of ours if you want to learn how to build legacy wealth. The crash of cash should be scarier than any other projected crash in the market. We got to get back to gold. Hard assets are where winners are winning. I believe that real estate's the new gold standard. But you find your hard asset and you go hard into it, because that will help you develop, not only protect your capital, but help you grow your capital as quickly as possible. Two other points, conclusions that I'd make here is don't invest in things you don't understand. One of the reasons why I love real estate is because it's simple. At the end of the day, I know what a roof is, a window is, a door is. It's not difficult. It's not a complicated asset class. It's not hard to understand. What it allows me is the ability to get into something that I can easily disseminate. But I can tell you, like as a guy who comes from finance world, I used to get those booklets on my portfolio or my 401k or whatever, and they've got all this charts and graphs, and I didn't understand any of that stuff, and most consumers don't. And yet we're giving all of our resources to the Edward Jones of the world, trusting that they're going to know how to do something better. And the truth is that they're just selling a fund that was handed down to them by the institution they work for. I'm not anti-stock market, but I am anti putting all of my trust in somebody else who just simply got a license instead of developing the knowledge for myself to be able to grow beyond what the specialists might sell me in my stocks, bonds, and mutual funds. All right, and then the last one that I would just say, and then I'll pivot over here, is this idea that FOMO is never a good reason. Is never a good reason to invest in anything, but neither is fear of screwing up. I never invest in anything on the fear of missing out. Right. So if you're sitting here and you're like, man, and you're hearing like, prices are going to go up in 2024 in the real estate world. It's just a question of whether or not they go up a lot or a little. Right. If rates come down, prices are going to go through the roof. So if you're sitting on the sidelines and you're thinking, man, should I wait to buy? Should I wait to buy? Should I wait to buy? The answer is that now is going to be the best time to buy in the foreseeable future. That is I will stand by that fact. But it is not a good reason to go buy outside of your capacity just because you're afraid that you're going to miss out on an opportunity. FOMO is never a good reason to invest in anything. You've got to invest in your knowledge. You've got to invest in your ideas and how you can really build your understanding of the strategy and not just go all in on something for the sake of missing out. But fear of screwing up is just as destructive as fear of missing out, because people sit on the sidelines with analysis paralysis, waiting, watching, afraid that they're going to screw it up. And again, real estate's my chosen asset class. So I'll continue to shout it from the rooftops saying that, hey, look, the beauty of real estate is it's really, really, really hard to screw it up. If you can get into the game, you can buy the assets, you can hold the assets. Even if you didn't get the right deal, you will win over the long haul. That's how it works, right? Because it's got the longest proven track record. And that's why I tell people like, hey, let's go through the facts and not go through the news and not listen to just the news. The facts tell us that the future is bright. The facts tell us that even if the market takes a dip and even if everybody, even if I'm wrong and the market completely unravels this year somehow, some way, that if you can wait, you will win. And that's really what I want to help people understand. So if you're in the live, you're in the, whether it's Facebook Live, Instagram Live, you can drop some questions here in the chat. I'll try to flip over here and answer them if I can. It looks like Sandy wants to make sure I'm clear. You're buying them and renting them out. Well, my strategy is multifaceted, right? So some of the deals that we're buying are rentals. I mean, I bought over $10 million in real estate last year, most of which are rentals now. So yes, we're buying a lot of rentals, and my chief strategy is to own as much as I can. Like that's my primary strategy, but I still have to, I can't eat on rentals, right? A common misconception for people is that cash flow is the reason why people buy rental properties. Cash flow is just icing on the cake. The real reason why wealthy people buy rental properties is really for the tax benefits and the long-term appreciation. So for me, like if I can get some cash flow, I'm happy. But I really am not as concerned about the cash flow as I am about the total ability for these real estate deals to offset some of my other earned income and some of my other businesses, as well as provide me legacy growth. If I do nothing, if I literally just stopped, I went back to Bank of America and got a great job and and just said, I'm done building my portfolio. I will all but guarantee myself $20 to $30 million in paid off real estate in 30 years, just because I bought the real estate. Like, not I'm not that smart. I just bought a lot of real estate. And now all I have to do is let renters pay them off, manage them responsibly, take good care of them, and let time do what time does. That's why for us, we're continuing to buy aggressively. But, Sandy, to answer your question, like, we're buying and renting them out, but we're also fix and flipping, right? Because I need short term cash to come in to pay to operate our companies, to pay my bills. We also are wholesaling real estate, which is something we teach our students to do, which is a great way to get into the game. And by the way, if you're sitting here going like, well, that's great, I don't have any money though. Well, the beauty of wholesaling real estate is you don't need any money. It's the greatest way to learn how to get into the game without using any of your money. And you can get really, really great paydays just by learning how to find deals. Somebody asked, did you buy with a mortgage? We've bought with mortgages. Most of our deals now are done with some hybrid of investor capital, hard money, and then private money. We partner with a lot of people with private money. A common thing that people don't realize, because I hear this all the time. Well, I don't know anybody in my network that has any money. Well, I'll challenge you with a couple of things. Most of my investors, we raised close to 5 million last year from private individuals. Most of my investors are not high net worth individuals. Most of my partners, most of my investors are Joe the plumbers, are Bob the engineer, are guys that have been in their industry, have been contributing to like a 401k or an IRA for 20, 30 years, and they're frustrated with the stock market. They recognize that Wall Street's become the proverbial roulette wheel of investing, and they're starting to understand that that there's another way to do this, that they can actually do it differently. And so they invest, and most people don't even know this, but you can take your IRA, your 401k, your Roth, your 403b, and invest that money into real estate deals with all of the same tax benefits of any typical retirement account. So we help people do it that way. So yes, we use mortgages when we do the BRRRR method. We're generally using some mashup of like hard money and then private money. We fix up or do whatever we're going to do with the property, and then we refinance it with a local bank or a DSCR loan, which is a loan that is available for investors. That because that's the other thing for you guys to understand, and I think the question that's being asked here is you don't have to qualify for conventional financing to buy real estate. There are a litany of products available to people who are looking to build their investment portfolio, but don't qualify because they don't have a W-2, or maybe their debt to income ratio is too high. There is a whole bunch of uh, products that are available to people where it's called asset-based lending, where they're going to provide you the money that you need to do the deal based upon the quality of the deal, not based upon your personal financials. We do deals. All of the real estate that I bought last year was with basically none of my own money or very little of it, and no credit, no financials. I didn't provide a tax return, a W-2, none of that. And we bought over $10 million in real estate last year on these investor products and raising capital and doing these things. So question was, how do I use my 401k to invest? The way that high level, and if you want help with this, you can go to horizontrust.com/Micheal Miller, and they will, you can get all sorts of information there. Or if you want help with it, you can just DM me and say, 401k or something, and I'll have our team reach out to you, and we can kind of walk you through it, because we help people convert. Whether you partner with us on our deals or you just want help figuring out how you can get your retirement money working into real estate, we're happy to help you do that. There's no strings attached. We don't charge for that. We just want to help people get into the game. And so the high level, though, is that you convert your whatever it is, 401k, IRA, whatever, to what's called a self-directed IRA. And a self-directed IRA will allow you to invest directly into real estate assets or other types of hard assets. You can invest in cryptocurrency. You can invest in businesses, LLCs. There's a number of different things that you can do with those accounts. There are some limitations, and that's why, like, send me a DM if you want to talk through it. so I can give you kind of some of the high level information, because there are some limitations. You can't go buy a rental property or a vacation home with your retirement account and then go stay in your vacation home. Like, the IRS isn't going to let that happen. There are some limitations. You can't invest with your vertical family line, meaning you can't invest with your mom, dad, grandma, grandpa, or son, daughter, grandchild. There are some limitations you have to follow. But the custodian, we could help you kind of connect some of those dots and understand a little bit about how that's possible. But it's a super powerful tool. Being able to invest through your retirement accounts is a super, super powerful tool. But that's a great question. All right, I see some of the viewership dropping off, so I'm going to assume that most of the questions have been answered. If you've got any other questions, feel free to drop them in the chat. Let's see here. Somebody said, here and listening, I'm not concerned about a real estate crash for sure. Well, that's good, because the data just doesn't point us to that. And guys, here's the high level thing. Like, money is not your problem, right? Interest rates are not your problem. Knowing how to access capital is not the issue. It's really not the problem. The problem is you're not connected with enough people that have been to where you want to go. I mean, I sat with family the other night, and it was like, well, I really want to do it. I love what you're doing. I really want to get involved. We just don't have any money to put down. We don't have any money to start. And it's like, well, then you need to start, right? You got to learn the skills. You can do real estate transactions with none of your own money. It's possible. You can buy real estate. We're buying real estate deals. I just closed on a deal, 2.75% interest. Guys, you don't have to pay 8%, although I don't think 8% is really the problem. You don't have to pay 8%. You can purchase properties and find ways. We buy properties subject to, where we take over the existing mortgage and we're able to hold on to the interest rate. No credit, no cash, no financials, no W-2s, none of that. We're able to purchase these properties and not provide any of the typical conventional ways. But the only reason why I know how to do that, the only reason why we've been successful, is because I've done the work and I've made the investment to get into rooms with people who have been the places that I want to go. And so my encouragement to you is, like, if you're sitting around going like, man, I'd really like to do more. Like, I'm really like, wow, that's crazy. Like 10 million in real estate in 1 year. Like, that seems impossible. I'm telling you guys, it's 100% possible. And the barrier to entry is not your money. It's not even really your knowledge. It's the people that you're around. You've got to get into the room with the people that can help you get there. When I went to my first mastermind, I'll never forget, I sat around a table with guys that had $100 million portfolios. And I felt like I had, like, at the time, I had like maybe a couple $1 million worth of rentals. And I felt like I was like, walking in, I felt like I was awesome. I'm like, yeah, I got a couple million in real estate. I'm really, I'm doing really good. I sit down on the table and they start sharing their stories. And this guy's like got 80 million and 120. And I'm like, and literally it got to me and I'm like, I am at the wrong table. Like, I'm in the wrong place, guys. I'm really sorry. I'm over here with my couple of pennies. And for the next hour and a half, these multi-millionaires spent all of their time and energy just dumping knowledge, dumping wisdom, helping me educate myself and grow into just these little knowledge. And by the way, guess what happens now? Not only did I get an hour and a half of brain dump from really successful people, but I got a dozen phone numbers of guys who have dealt with every problem that I could imagine dealing with in my business. And when I run into a roadblock, I pick up the phone and I send a text message. And now, because I did the work to get into the room and to connect with the people, now I've got a Rolodex of support where I don't have to have 100% of all of the answers. I don't have to have 100% of the knowledge. I just need to have 100% of the courage to jump out of the boat, do the work, and then ultimately trust that when I find a problem I don't know how to solve, I know a guy that's going to help me. I know a guy that can help me get it done. I want to be your guys' Noah guy. Like, if you're trying to get into the game, I want to be your Noah guy. Those of you that know me, you know that you send me a DM, like, I'm going to get on the phone and I'm going to call you and I'm going to talk to you. Why? Because I'm not trying to gatekeep this information. I have a core belief that if we provide enough value to enough people, help you achieve your goals, help you win, and ask for nothing in return, that it is extremely unlikely that we're not going to be winning too. because when the tides rise, all the boats float. And I want to be the I know a guy for as many people as humanly possible. Why? Because the people that helped me win are ultimately the guys that became my I know a guy, and I know the value that that's provided me and helped me grow. And ultimately, our the compulsion is to pass that value on. And that's what I hope this community is. If you're not a part of our Facebook group, like if you're watching on Instagram right now, you need to drop over to the Facebook group. It's free, it's private, it's a community where we just share ideas. We've got our coaches in there. They'll help you analyze deals, they'll help you look at your strategy, they'll weigh in on stuff for free. Like, we'll just help you. If you want to join the mentorship and you want to get into the program, awesome, we've got that available. But the goal here is to help as many people as possible achieve their goals. And for me right now, if your goal is not to own as much dirt as possible, then you're missing out on the ability to build legacy wealth, because I'm absolutely convinced that this is the best time to buy real estate for the foreseeable future, even with the high rate environments, even with the high price. And guess what's going to happen? Somebody's going to repost this, and 17,000 trolls are going to come out of the woodwork, and they're going to drop all their hate into the comments, and I'm going to troll them back because it brings me a lot of joy to troll them back. But the reality is that the people that are going to raise their hands are the people that have decided that the system is rigged against them so that they'll never win. When the reality is that the system is rigged against them until they learn the rules of the system, and then they get to play by the same set of rules. And that's what we're hoping to help people achieve. Is I want to be somebody that helps you break out of the rat race and help you build that legacy for the long haul. So looks like most of our guys have dropped off, so I hope this was helpful. If you have any other questions, shoot me a DM, shoot me a message. Like, I want to be helpful to you, whether it's real estate, whether it's rules of money, whether it's tax strategy. Like, we've got specialists on our team that I can refer you to. Like, we've got all sorts of resources, and we just want to be able to help you achieve your goals. That is all we ask, is that we can provide you help. And if you find help from us and you start to achieve your goals and you start to have your wins, I am absolutely convinced that we're going to see value in return. I'm not trying to, for us, it's a value first organization. So that's my